All right, welcome back for the episode of Carnivore Trades. Today is Tuesday, September 5th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. Hope everybody had a great Labor Day if you're in the U.S. Had some time off. Enjoy the last bit of summer. But anyways, markets here in what I would call a holiday hangover session. So again, got a shortened trading week, and last week was a holiday week, obviously, or at least pre-holiday week. And we expected the light volume. We expected kind of neutral to upside. And today, look at the range here. So, basically $2 on the SPY. That's nothing, right? So definitely a bit of a hangover day. Market just kind of asleep here. Everybody's out of their routine. They're trying to get back, kids back in school, that type of thing. And everybody just kind of lumpy here, right? So the market's here kind of just sideways, although the Qs are having a nice gain. Believe it or not, it's a quiet day action-wise, but there was a few things to talk about. You look at Tesla here, up 5% on the day, and whenever I see the dollar index ripping higher, and I see crude oil ripping higher, and I see the 10-year, I think to just buy Tesla. Get in at any price, and everyone knows to do that. So obviously I'm joking here, but we did have some good price action. This morning also, Fed President Waller, let's look at bonds here, or we can just use the ES for right now. This morning, basically saying we're seeing progress in the job market, and that another rate hike won't kill the economy, as opposed to the other 500 basis points. But either way, you see the market really like that. We got a bid, and then actually it was right here. We got a big bid, and then we came right back down. If we look at bonds here via the ZB, you can see it got a nice pop and then right back down, and it's actually negative down 1% on the day on those 30-year futures there. For those of you who follow the TLT, pretty good down move, 1.3%, 1 1/3. Strange price action. So if we look at XLP, which we don't look at that often, down 66 basis points. XLU down 1.5, basically in the double bottom here. And then you look at Tesla, up 5%, right? Triple Qs here are green, up 0.25%. Not a crazy gain, but they're up, right? Then we see the Russell getting pounded, down 2% as KRE gets hit. So that's down 2% as well. A mixed bag. The only thing I can make out of this is that you're seeing, right, dollar up. By the way, crude up big time again, although it did come off the highs. Seeing dollar up, crude up, Tesla up. And it's not like LCID or NEO was up as well, or at least up reasonably. Rivian up 0.5%. But you see those up, XLP, XLU down. And the market's not really down that much, and you actually have certain areas that are performing very well, again, like Tesla and the triple Qs. Microsoft having a decent day. AMD also having a nice day, up 1 3/4. Intel up almost 1%, so some semis doing okay. What am I saying all this? It tells me that the market believes that their soft landing is actually going to happen, or at least that's the way it's trading right now. I don't know if tomorrow the big boys come back, we get more volume, and who knows, maybe we gap down, I don't know. But that's kind of the only analysis I can come up with, outside of the fact that it is a holiday hangover and we're just seeing this kind of tightening range there. I'm obviously not in that camp, as you can imagine. So I don't think we'll have a soft landing. I don't necessarily think it could be a hard landing, but I think it'll be more of a stagflationary type move, hence why we're seeing the dollar index continue to push up. You take a look here on the weekly, back above the 50-week moving average right now, not on the closing basis yet, but it is pushing up. We're into this little mini double top around that 104.70 area, and the dollar is just continuing to hold up well. Next big area is around 106 if we can't get through this, or at least can't sustain through that. But right now markets are just kind of hanging in there, so big level to watch. Let's keep it simple here. Where do you think we are? 4,500. Who could have seen this coming, right? A slow day. We're going to pin it right there. And that's where the gamma is probably going to be this week. So whoever wins this battle is going to win the week. And that is the 4,500 battle. I talked about this morning in the short. But if you take out this pivot, this 4,500 area, and this pivot, this little, it's kind of a minor chop zone. You can kind of see it better on this. Well, not really. But this kind of like minor little chop zone, consolidation zone right here. And then that pivot, we get a break of 4,500 and this goes, we can gamma down to, 4,450. That's where I think it would go most likely. And there's your pivot high at 4,458. But then here's your real big level, 4,440. That's where we broke out of previously. So that's what I would expect. There's also that pivot there, kind of a point of control. So in that 4450 area, we can gamma down. I know I've talked about this a lot recently because we've been gamma squeezing a lot recently, right? No supports, right? So if we take out this area, there's no support really down for another $4 or $5 on the spiders. So that is an important area to me. And it leaves kind of not a lot of margin for error for the bulls, right? Like technically, you can make a case where we're just consolidating here for a potential another push up, but you don't have a lot of room on the downside, right? You don't have a lot of wiggle room. So we may see a retest of 4,450. I think that's likely. But in any case, markets are holding up right now. Again, the triple Qs starting to fade a little bit here. And again, look at how we got a little too far away from 4,500, and look at where we are now, right there, 4,501. But again, the triple Qs here now only up 20 basis points. Again, 380 still resistance here. Where would 4,450 coincide with on the Qs? It's 370. So that's your big level there. If we look on the intradays, again, not a lot of support really past here. You got a little bit at 375, but then your big level, if we look on the hourly, it's right there. That's your big level there, 370 area. So again, we'll see if those levels get hit, but for right now, markets are just kind of hanging in there. Now the Dow, down 0.5%, so starting to kind of just lose that low from last Thursday a little bit. It's not dire, right? If it's heads down, you still have support at 345, 346. But a little bit of weaker pattern, right? You want to see this stay upright and kind of in a flag formation for a move higher, but it is slipping a little bit. Now here's the big loser on the day, the Russell. Down now 2% here as we inch lower. You see it inching lower as we get into the final half hour. A pretty good rejection. I think there's actually a little fib here. Looks like we hit close to a 50%. Yeah, so we almost hit the 618 on Friday. We did pull back in off that. We filled those gaps. So pretty good rejection there for the Russell. Why is it down so much? Well, you've got the KRE down 2%, and that's just generally going to be how it is. The KRE, when they started putting these regional banks into the Russell 2000 a long time ago, and they made up that weighting, the regional banks had like a negative beta. Right, so no volatility. Now they move 1% a day like it's nothing. So with the KREs down 1%, the Russell's going to be down unless industrials and small cap technology are ripping higher. So that is dragging down the Russell there. Not a great sign there. Should have some support at 186, but a pretty good dump there on the IWM, and we'll continue to watch that. Semiconductors here continuing to struggle with this red bar. So we are above that right now. We got 30 minutes left. We'll see. Very interested to see if that does close above that. If it does, that gives you the upside bias to 160 in this gap fill, which is essentially double top. But right now, if it closes back below, it is a little bit of a sign of weakness. And NVIDIA's kind of on the softer side today. It is green. 0.5% for NVIDIA is like, that's almost like a negative day for NVIDIA, only being 0.5%. AMD up 1.6. That's having a decent day. And then Intel also having a nice day into this triple top here. Intel getting kind of interesting too. Did that failed bear flag on the monthly outside candle, and then if this can really get going, this could maybe even get back up to 45. But right now, having a decent day, and that's helping out the SMH. IGV also green up another 0.5%. Still think this one needs to pull back to 350, but that has held up well. So definitely keep that on the radar. What has not held up well is the Dow Transports. We've mentioned this a lot over the last 2 weeks. Said this is starting to look like a bear flag. And it looks like a bear flag breakdown here. So you'll have a little bit of support at 15,250 if we get there in the next day or two. But you've consolidated now for 2 weeks. So I wouldn't bet on that. I certainly wouldn't test it long here. I would at least wait for 15,000. So that's your previous breakout. That's where we broke out of back in June. And then you have the 100 period moving average there as well. So that could be, and then there's your 20-week moving average right in that vicinity. So that is probably a better level. But I don't like that bear flag rejection of the 50 and 20, and now a continuation down. So transport's telling us that things are a little bit weak here. Higher oil prices may have a lot to do with that. Could be also pricing in more of a slowdown. but transport's on the weaker side. Definitely don't ignore that. Also on the weaker side, actually, well, we got to get to interest rates first. I almost forgot. I believe TradingView's kind of got not really showing the updated print because of the holiday, but I can look at the 2-year futures here on here, and up 1 3/4. So big move there. 4.9. This is a little bit skewed. It's actually probably closer to 5%, as we closed at 4.88 on Friday. But 2-year holding up really well. Again, up move, double top, pull back, cup and handle look, no problems. 10-year acting well, 5-year acting well, and the 30-year acting well. So yields continuing to hold up. Again, the market, I think, is taking this as, oh, yields are going higher. We must be having a soft landing. I don't really believe that's what's happening, but that's what the market seems to think right now. Anyways, now over to XHB, down 3.7. Wow, look at that, right? So right up into 84. We had this bear flag. It tried to fail here, and then we went up into this area. Pretty good dump there. So this previous level, if you're wondering, was that pivot, and then that kind of, hammered on it, then we broke, then we kind of retested it. So we're kind of right into that area right now. No problems here on the weekly yet. We still had that really nice outside week last week, but you start to take that out. If we get below 79.66, especially on a weekly close, that'd be pretty, not so good. And then really the big level is right here, 77.95 on a weekly close. You take that out. You'll have this trend line here, but that could take XHB all the way down to 71.50. So just be aware of that. But right now, you don't want to get too far ahead of ourselves. Every time these things sell off, they go right back up. So don't get too excited in either direction here. But you see the ITB there. I talked to you about 87, 88 and change, and there it is backing off there. I'm not sure if we closed. Yeah, it looks like we did just close above that green bar there on Friday, but it is pulling back nicely, so we'll continue to watch that. VNQ backing off as well, again losing that kind of nice upright pattern, that bullish structure. See, it may need to come down and hit this trend line again. If it gets through that, I don't see it getting through 78 right now, especially if it goes down there in a straight line. If it does turn up and firm up, 84 is still resistance. XLF, so down 80 basis points. Nothing terrible here. Again, I talked about this a lot recently, but Berkshire makes up a lot of it. And even though Berkshire did reverse off a double top, it's only down 45 basis points, so nothing terrible there. But these banks, I don't really like it. GPM, again, looks a lot like the transports, right? Daily bear flag starting to make a new low. BAC, daily bear flag starting to crack that lower line. Wells managing to be green today, but still kind of that daily bear setup. Citigroup, very weak. Goldman, very weak, going to lose that green bar from the other day. Morgan Stanley also on the weaker side too, rejecting at 86. So again, these banks, I just don't really like what I'm seeing here. The XLF, you can make a case. You have room for a higher low. I can't say that you don't. But if we take this out, it's down to this trend line here. And then if that breaks, it really opens up to probably a 32 gap fill there. But again, they're holding up now. We'll leave it at that. KRE again rejecting the 20 and 50. We tried to get above Friday, right back below. Today, we'll continue to watch that for pattern. Remember, that's going to drag the Russell down. Then KBE here rejecting at 40 and pulling back here today. We'll see how that reacts at 38 again. Broker dealers also down, so reversing that whole move from Friday. Again, we talked about 510 being resistance. We got a nice pullback there. It's really simple. We'll leave it at that. But they're still holding up really well. Crude. So big thrust. This took off before I thought it was going to. A big volume there. Maybe who knows, maybe a short-term top. You got good volume, and we are decently off the highs. And the reason I say that is because we went into, kind of this red bar here, this breakdown bar, and I just don't think we consolidated enough to really get through it right now. Crude's holding up well, but I won't chase it. So it's acting well. It's doing everything, it's doing everything right. It's a little overbought here short-term, but there's nothing to say that this can't just flag or pull back into next couple of weeks or so, right? There's nothing to say that. We got that weekly breakout. This has been the cap since November, right? We broke out on a weekly close, so that's a sign of strength. Doesn't mean it won't pull back, doesn't mean it can't go higher, but I'm not chasing it, so that's just not the way I do it. But yeah, nice move. Watch it here again. the other thing I say about it is seasonally too. After Labor Day, you can kind of get that reduced driving demand, so that could be a little bit of a thing here. But again, it's up on. It's never been a demand story with oil, right? It's always been supply. And what do we get news today? Russia and OPEC looking to cut more exports. So that's the move there. It's holding up. We'll continue to watch it. XLE right into that red bar. Nice little reversal, maybe a little shooting star candle there on the XLE. We'll watch that going into next week. I would prefer it a little bit more. I've been talking to you guys about this like weekly consolidation, right? And I just thought it was a little premature here, but again, pulling back off that level, we'll see how it shakes out over the next couple of weeks. Again, a little overbought. XOP actually red here, down 1/3%, but I like that weekly close too. So I don't think that it's going to be a big pullback if there is one, or if it is, it's one that you'd want to buy at some point. And then OIH finally getting up to almost 360. We've been looking for that 100-month moving average. You basically kissed it. 364. Little shooting star there as well. High is 359.05. We'll see if that pulls back here also. Nat gas pulling back as well. Again, still inside of this big ascending triangle. I believe there was news out of Australia with the Chevron strike, so that's why it's down. But again, pulling back here and kind of into this trend line here again, but nothing really going on the bigger picture. Still has that nice weekly base. All right, dollar index, which we kind of touched on a little bit. I think I'm losing my chart here. All right, so apologies, I don't have my other chart set up here, but we can go over it on here. DXY, again, I just hate these candles, but again, we're into that double top 105 area. And again, intraday, look at what happened. So this was Waller's comments earlier. We pulled back for a whopping 20 minutes and then made a new high, and now we're back closing at the highs of the day. So dollar just continues to ramp up here. This is why I said, look, you get above these levels, you can squeeze. So the dollar looks to be doing that right now, and it's acting well. It is into a little minor resistance, but the next really big level is 106. So DXY still holding up. On the gold here, down 0.75%. So losing that nice kind of upright structure, coming down. Again, still not a broken pattern, but if we do start to roll over, it's 1900. If 1900 fails, it's down to 1825. Silver also pulling back very sharply as well. Filling that contract gap. Again, didn't really build any support on this thrust here. So, probably back to 23 is your next really big level. If we look on an hourly, you got a little bit at 23.50 there. But this is kind of your big breakout here. So $23, I'll say, for silver. On the downside, if that doesn't hold, I really think these lows break and we head down to 21. That is a buy area, though. Platinum, big rejection. So he's talked about 960. That obviously failed. You could, however, let's not get too ahead. You could make a case you got a W, and if this puts in a higher low, it could make a V. So I'll watch that around 920, see how that reacts there. If we take this out, then it's down to this area, which I like. But platinum, pretty good sell there. We'll watch that. Palladium, a little bit of a dip and then came off the lows here. Kind of hit that double bottom. But again, weekly, I don't love it, right? Down move, sideways. Not in love with that. I think one more flush here gets us home on palladium. Then it'll be time to buy. Copper, a little bit of a hammer candle. Nothing going on here. If we can flag a little bit, we can push up to 390, 395 again. If not, 370 is your near-term floor. Bitcoin here, again, we had that big pop last week, faded the whole move, kind of sideways throughout the weekend, and we're kind of sideways to lower today. If we take these levels out, if we consolidate long enough, if we go to a weekly, we put in enough of a base here, it can go down to 21.5. In a straight line, I'd consider being a buyer there. But I'm not touching it until then. It's got a lot of proving to do, so I'm not dealing with it right now. But again, starting to put in a little base there. All right, anyways, back over to the spiders. Look at the SPX again. Just off the lows there, 45.06. Should be capped at 45.10 right now. based on the last little bit of gamma that's out there, at least for today. But again, watch those levels. If you lose that 44.90 area, especially on like an hourly close, I think you can kind of gamma down into that 44.60, 44.40 zone. So that's something we'll be looking for. For bulls, you want to just flag here, and kind of like let that 20 moving average start to curl up. But again, there's not a lot of margin for error, and if we do go down, that's kind of your level there to watch that bulls need to step in and buy at. So anyways, guys, gonna wrap up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all tomorrow.